Bond giant PIMCO is out with its annual secular report that takes a look at issues shaping the global economy and financial markets over the next 5 years. For details on that report and much more, we want to bring in Rich Clarida. He is the former vice chairman of the Federal Reserve, also a global economic advisor at PIMCO. And Rich, we'll talk about inflation numbers and other news of the day. But first, let's talk about this longer outlook. You take a lot of time to sit back and really try and figure out what's changing from a secular perspective. What is changing?
Well, Becky, a lot is changing. You think about the last 12 months, and I lose count of all the events. But what we're really focusing on is what we call the idea we're entering an era of fragmentation. So if you look around the world, we're in a world in which we see fragmenting in security alliances, in trading blocks, in currency
Moving away
zones.
from globalization.
What?
We're moving away from globalization.
And we have been for some time, but under Trump 2.0, it's accelerating. And in particular, we also think we're in a world in which economics no longer drives politics, but politics can drive economics. It's going to amplify cycles and market volatility, but it's going to increase opportunities to generate returns if you understand these trends.
What does that mean specifically, that economics no longer drives politics, but politics drives economics?
Well, there was a consensus. It was oftentimes called the Washington Consensus, globalization, open markets, integration. And it had a good run for about 30 years. We saw the world start to move away from that in the last decade, and after COVID, it's accelerated. Whether or not you call it industrial policy or building at home, all these trends are in play, and we are saying that under Trump 2.0, it's accelerated, so it becomes the new reality.
I just think it's different. I mean, if you look at the way the Biden administration, you talk about industrial policy.
Yeah, oh, sure.
It's even bigger in the Biden administration, and it reminded me of something that President Obama reportedly said early on, was that, I'd like to grow the economy, but that's not my primary goal. My primary goal is to divide this huge economy more evenly. And that's politics driving economy, right there.
This has been ongoing for some time. It's just accelerating now. So I think we really have had a clean break with the old globalization world that we're in. And, of course, you see it in Europe. China has been mastering this model for three decades. And so our point in the fragmentation era is that it's no longer something where we may arrive there. We're in it now, and so we need to understand that as investors.
What are the impacts on the markets, on the economy and the markets, let's say, for those?
We think we're in a world of more amplified cycles, in part because we think governments have less fiscal space. There's a lot of debt out there that somebody has to hold. Again, we may be in a world, Becky, where central banks become the only game in town. Unlike in the last decade, they have some room to cut rates. But we think we're also in a world in which there are going to be lots of winners and losers across sectors and countries and individual companies. And so, not surprisingly, perhaps, from PIMCO's point of view, we're thinking a world where active management is really going to be essential to doing well.
Do you think that, I'm still going around with this politics driving economics, do you think that it makes it way tougher for businesses to make these long-term decisions because every 2 years or 4 years you could be dealing with a different set of rules and regulations? I mean, we have seen that play out to this point.
That's the $64 billion question. And there's no doubt that right now that trade policy uncertainty is a fact of life. On the other hand, once I think businesses and investors start to understand that we're in this regime, I think that, especially in the U.S. economy, it's a very nimble economy. I think it will adapt and potentially thrive in this regime. But there is going to be a transition. But again, this is not just a U.S. issue, Becky. We see it in Europe in particular.
Oh, in Europe in particular, too. Okay,
Yeah.
Let's talk about that, because I was thinking of this GM announcement this morning that they're going to be putting $4 billion back into reinvesting in U.S. plants and getting rid of what they were going to do, an EV plant, and turning that into a truck that's to a factory that's making SUVs that are gas powered.
Yeah.
And again, that's a shift from what the Biden administration was pushing them toward. Does that last and stand the test of time? And what do you see in Europe?
Well, and indeed, we point that out in the essay that the U.S. has industrial policy under Trump, but it's just different industries.
Right.
So I think that's an element. One of the things that we picked up at our forum about a month ago when we heard from folks in Europe is that these trends are also underway in Europe. Germany did a U-turn, for example, by releasing their fiscal break.
Yeah,
the Germans are now going to have budget deficits, and they're going to be focusing on defense. Also, more of an emphasis on energy security as opposed to the green transition. So I think that these trends probably will last longer than the current officials in place.
So you say there are going to be winners and losers. Who are some of the winners you see?
Well, obviously, it's got, and depending on how the trade arrangements shake out, there will be countries in which U.S. has enhanced trade arrangements, others where there's probably more hostility. Also, it looks like the Trump administration is really serious about the issue of China exporting to third countries who in turn just re-export to the U.S. So I think this is going to be a case where the details will be important. Let me also emphasize, Becky, that, when I did your show probably 6 or 9 months ago, we were talking about U.S. exceptionalism. And a lot of the factors that made the U.S. exceptional are still in play: strong productivity growth, an innovative economy, efficient capital markets. And I do think when we get on the other side of the uncertainty, what the critics would call chaos, the exceptionalism may return pretty sooner than a lot of people think.
Well, let's talk about the tariffs and what we're dealing with right now. We do have an inflation print that we're awaiting this morning at 8:30. How come we haven't seen really the inflationary pressures from the tariffs to this point? Do you expect it to show up this month, next month, or
we do
not
expect it to start showing up in the data, but I think I must confess, year to date, and right now we have data through April, the inflation numbers, especially in the last 3 months, have come in quite well. Indeed, if you look at the Fed's preferred inflation measure, the PCE price index, the most recent data point was inflation at 2.1%. So I'm sure my former colleagues, and perhaps Jay Powell, is thinking close to mission accomplished. But of course, now the tariffs are now going to be a factor. But they've really not yet shown up in the data. We do expect it to be a factor. But also the max tariffs that a lot of folks were worried about on Liberation Day are probably going to be dialed back substantially. So there may be less of a wallop to the price index than we expect.
Yeah, and when you sat down and the cameras weren't rolling, I said, would you bet your life that the effects of the tariffs eventually, either today or eventually, show up in the inflation data? And I guess you appreciate your life, because you wouldn't bet your life on it. You think so, but you're not at a. I'm naive and just eternally hopeful that maybe there's a way of either passing it on to suppliers or eating some of it, or maybe the profit margins aren't. I understand the rationale. It's almost the same rationale, Rich, as raising wages, and that's going to hurt. That's going to hurt profit margins. That might be worth doing after shareholders have been enriched for years and years, and the middle class has been hollowed out. Maybe we take a little bit less of a profit margin, and I'm hopeful. In a best world, think if Powell could lower rates, inflation was quiescent, and labor stayed strong. Think about that. That would be.
Yeah. Well, I think the other factor in play here with the tariffs is if they do stay in place, they're going to raise a lot of revenue for the government. So the folks who are really worried about the budget deficit need to factor in. We're going to get about up to $3 trillion over the next 10 years if a 10% tariff were to stay in place. And so that's also a factor for the fiscal.
People that hate them, and it's a tax on consumers too, but if the corporations ate some of it, it's just like a corporate tax. The left loves corporate taxation.
Well, exactly. It's going to raise a lot of revenue for sure.
But as Leisman would point out, and as he did yesterday,
it's incredibly regressive. If it's consumer,
but whatever portion of it, you're probably going to get it split between all of those places that have to pay for some of it. Inevitably, I would assume the consumer picks up some of it, and whatever that is picked up.
But on the reason you're doing is to try to help the same people that you're worrying about it being regressive. You're trying to have higher wages. You're trying to have jobs come back here, good, high-paying jobs come back.
Why cut taxes on?
Because we've tried it the other way.
And then say, okay, we're going to hit you with what is essentially a VAT.
Well, I think if the corporations ate half. I mean, I don't like raising taxes on corporate. I can't believe what I'm saying,
and then your shareholders say, "Forget it. I'm not going to put money into you anymore."
They've been making billions, just like we heard about.
Hey, Elizabeth Warren.
Exactly, they've been making too much.
Right. What's too much?
Yeah, exactly.
What's fair? What should we go back to? So, Rich, final thoughts on this. What should we be watching, let's say, in these numbers that we get not only today, tomorrow, but in the next couple of months to come?
I will tell you, I think just as important, Becky, as the actual inflation data is the inflation expectations data. That's, I think, an important reason why the Powell Fed has not signaled more of an inclination to cut rates, what some call a good news rate cut. there's no doubt that if the economy craters, unemployment goes up, GDP contracts again, that I think they'll be cutting. The question is, do we get what I call a good news cut out of the Fed? And I think an important reason that we haven't got that signal is they are concerned about inflation expectations because the last 4 years...
consumers and businesses?
Businesses, not so much. Really, it's just in the financial markets, actually, if you look at the inflation in the financial markets predicted, it's basically at the 2% target in a couple of years. So it's really the 330 million people who are not economists or people on Wall Street, and those surveys have ratcheted.